It's always good to check in with Alan Knuckman, the Chief Market Strategist at St. Paul Research for his trades. What's on your trader mind, Alan?
Hello, Angie. It's time for my victor or victim rant about trading.
What are your best trades so far?
Stocks have shot up. We can buy things that look bad. Example is we took a 50% gain in Starbucks and in SunPower here in the last couple of weeks. Or you can buy the best to get better. Now, a good example of that is Halliburton and Schlumberger have both shot up. So the energy plays have done well, and it actually feels good to buy gas knowing that you made some good money on those stocks.
Your new trade is Micron. That stock had a massive run last year. Shares popped from $66 to $97. When Micron gets momentum, it can really rally. But recently it has been selling off, which leads me into your favorite trading strategy, Alan.
All right, today's trade trigger is in Micron. Micron's down 25% in 2022. It's got a bottom base with this bullish divergence that we look for, new lows, but not new highs in volatility. And also we've got some insider's insight that people are loading up on this stock. It's been trading between 65 and 75, going sideways for 2 months here. 65 is the lowest for the year. A breakout of this range targets 85, and we were there just at the end of March. So in the bigger picture, it's been trading between 65 and 95 for 1 year. So again, the midpoint target there is 85. So a lot of it adds up positive. This is a stock that's it's got a PE of about 8. So it's very inexpensive in relative terms. So the play here is the August in the money, as you've seen for success here recently. The in the money 65 call for August has almost 3 months of time. That option's trade about 7 or so. And a breakout to that 85 level, this option would gain about 160%.
What are your trading day takeaways?
All right, today's trading takeaways. Number one, just talked about, oil's well. We've seen energy from that energy sector, and it feels good to make money. Now, the crude breakout, now above $120 a barrel, it had traded between 90 and 110, so that's a $20 range for 2 months in March and April. That breakout targets 130, so there's still more upside in crude oil. And again, I'm going to say it, if you adjust the 2008 price for inflation, we'd have to reach $200 a barrel, so we've got a long ways to go. Number two, bottom bounce. The risk reward has favored the bulls with this oversold situation in stocks, and we're nearly 10% off those lows in the last couple of weeks. So we've seen a bottom bounce in the S&P, but we need to see a breakout to sustain this strength. And number three, sideways stocks. So in the bigger picture, we're trading in a wide range between 3,800 and 4,200 the last 3 weeks in the S&P, and it's actually consolidating and tightening here between 4,000 and 4,200 for the last 2 weeks. So a breakout of that range targets 4,400. And then the next target above that's 4,600, where we were in April. Now, I say all this looking to see how the stocks are going to react, but more importantly, the VIX is breaking down, and we're at the lowest level since April there as well.
I like how you're talking, Alan. Thank you very much.
Thank you.
Go to businessfirstam.com for where to see our show on TV.